1. Start with an engaging introduction, highlighting the importance of financial intelligence and the role of investing in building wealth. 2. Mention that in this video, you will provide a comprehensive summary of the book, The Intelligent Investor, by Benjamin Graham, a classic in the field of investing. 1. Chapter 1, Investment versus Speculation. 1. Explain the distinction between investment and speculation. 2. Emphasize Graham's philosophy of approaching investing as a business owner rather than a speculator. 3. Discuss the importance of analyzing the intrinsic value of a company. 1. Chapter 2, The Investor and Market Fluctuations. 1. Explain the concept of market fluctuations and the psychology behind them. 2. Highlight Graham's advice on not being swayed by short-term market trends. 3. Discuss the concept of Mr. Market and how investors can take advantage of his mood swings. 1. Chapter 3, A Century of Stock Market History, The Level of Stock Prices in Early 1972. 1. Summarize the historical analysis of stock market levels provided by Graham. 2. Discuss the concept of stock market cycles and their impact on investment decisions. 3. Highlight the importance of valuation and the need for a margin of safety when purchasing stocks. 1. Chapter 4, General Portfolio Policy, The Defensive Investor. 1. Explain the concept of a defensive investor and their investment strategy. 2. Discuss the importance of diversification and asset allocation. 3. Highlight Graham's advice on selecting defensive stocks and bond investments. 1. Chapter 5, The Defensive Investor and Common Stocks. 1. Explain the factors to consider when selecting common stocks for a defensive investor. 2. Discuss the importance of consistent earnings, dividend history, and financial stability. 3. Highlight Graham's approach to value investing and his advice on avoiding speculative stocks. 1. Chapter 6, Portfolio Policy for the Enterprising Investor, Negative Approach. 1. Discuss the investment strategy for an enterprising investor. 2. Explain Graham's concept of the negative approach to investing. 3. Discuss the importance of avoiding speculative investments and analyzing financial statements. 1. Chapter 7, Portfolio Policy for the Enterprising Investor, The Positive Side. 1. Explain the positive approach to investing for enterprising investors. 2. Discuss the concept of a positive approach, based on careful analysis and intelligent speculation. 3. Highlight Graham's advice on purchasing undervalued stocks with growth potential. 1. Chapter 8, The Investor and Market Fluctuations, Revisited. 1. Discuss the psychological aspects of market fluctuations and how they affect investors. 2. Emphasize the importance of maintaining a long-term perspective and avoiding emotional decision-making. 3. Highlight Graham's advice on taking advantage of market downturns and remaining disciplined. Conclusion. 1. Summarize the key lessons from The Intelligent Investor. 2. Highlight the significance of developing a sound investment philosophy and maintaining discipline. 3. Encourage viewer to read the book for a more in-depth understanding of Graham's principles.